this short video, we're going to take a look at licensing Dynamics 365 fraud protection. My name is Vicky Lee, an independent Microsoft licensing expert, and I'll be taking you through this session today. Fraud protection is a cloud-based anti-fraud solution for medium to large organizations worldwide. It's designed to help lower fraud-related costs, increase profits, and improve the customer experience. Fraud protection consists of three different capabilities: account protection, purchase protection, and loss prevention. And these capabilities can be integrated together or used individually, but you choose the primary capability that you want to be licensed for, and that will include transactions for the other capabilities. The included quantities, which we'll see shortly, can then be increased as required. So let's look at a bit more detail around the different capabilities. And you can see that Dynamics 365 Fraud Protection is all about helping block fraudulent activity. And we know that there are three capabilities that it delivers on. So first of all, account protection helps protect online customer accounts by detecting and preventing fraudulent activities. Then purchase protection helps protect online transactions by detecting and preventing fraudulent activities. And it makes sure the right transactions are accepted. And loss prevention helps retailers to reduce shrinkage in stores. So how's it licensed? Well, first of all, you choose a base capability, license per tenant per month, and that includes a number of monthly transactions. So if you license account protection, it includes 100,000 account protection transactions. If you license purchase protection, it includes 10,000 purchase protection transactions. And if you license loss prevention, it includes 20,000 loss prevention transactions. You can then add additional monthly transactions in the quantities shown on the slide. And here there's both a tier 1 price and a tier 2 price level for when more extra transactions need to be licensed. So the first license that you choose is the base offer, and the additional transactions are known as overage SKUs. So let's get a bit more detail on those now and what else is included with the base offer. So we've seen that you would choose a primary capability, but actually each base offer includes transactions for the other two capabilities as shown on the table here. So if you purchase the account protection base offer, you get the 100,000 account protection transactions that we talked about, but you also get 2,000 purchase protection transactions and 4,000 loss prevention transactions. And the same is true when you purchase purchase protection and loss prevention. You get a base amount of all three fraud protection features. So we know then that the original offer includes a quantity of each service and that there are overage SKUs available if you need more of a particular service. And it's worth noting that you can actually purchase any overage SKUs on top of any base offer. So I might have purchased the account protection base offer, but need overage on loss prevention, for example. So for the overage, we have two tiers of pricing for the overage. And if you're purchasing a large amount of overage, then you may be eligible for the tier 2 pricing. So in this table, the top row reminds us of the number of transactions included in each individual overage SKU. And then for each overage SKU, there are two price levels based on the number of transactions you need. Tier 1 does not require a minimum transaction, but for the Tier 2 pricing, there is a minimum number of transactions needed to qualify for that price level. So, for instance, with account protection, if you're licensing less than 2 million transactions, you would be on Tier 1 pricing. Over that, it would be Tier 2. And the last row in the table, basically it's just doing the maths for you. It shows the minimum number of SKUs that correspond to those transactions. So in other words, how many of the SKUs gets you up to the minimum entry level for Tier 2 pricing. So let's take a look at a couple of examples to see how all of this works in practice. So here, a customer is interested in protecting their business from credit card payment fraud, and therefore their primary capability will be purchase protection. They have a seasonal business, and you can see here that they've estimated the number of transactions that are likely to occur through the year. So they've estimated their requirements, which equates to a total of 300,000 transactions a year, which is 25,000 transactions a month. And this is the approach that you should take. Estimate the number of transactions for a whole year and work out what that equates to on a monthly basis. Enforcement takes place annually. The customer will be sent an advice that tells them if there are more transactions to be paid for at the end of the year. So let's now see what's actually transacted for each month based on these figures. So as a reminder, here are the purchase protection transactions that we need, 25,000. And here are the tables of figures that we're going to need to use. The base offers on the left side and the overage offers on the right. So what licenses are required? Well, the purchase protection base offer includes 10,000 purchase protection transactions. So to calculate the overage requirements, we take the total number required, 25,000, and deduct the number of transactions included in the base offer, 10,000, which gives us a total of 15,000 transactions required to be paid for via overage SKUs. There are 2,000 purchase protection transactions included in each overage SKU, which means that we'll take the requirement of 15,000, divide it by 2,000 to find the number of overage SKUs. Now you can see that that equates to 7.5. Well, we can't buy half a SKU, so we need 8 of the overage SKUs. And looking at the right-hand table, we can see that this does not meet the minimums for Tier 2 pricing, so this purchase would be at Tier 1 pricing. So we can then see that the total cost for the customer will be the price of the base offer plus the total for the overage SKUs. Let's now look at a customer example where they're interested in more than one of the fraud protection capabilities. So they want to protect their business from fraudulent accounts, and therefore account protection is of interest to them. In terms of figures, they have 1 million users worldwide, and they expect each user to log in 20 times each month. They also expect the users to make 5 transactions each, and so they're interested in payment protection. So what are their estimated requirements? Well, they estimate that they will need 20 million account protection transactions each month and 5 million purchase protection transactions each month. So here's a reminder of the estimated requirements that we've just talked about, and the base offers table and the overage table. So to the licensing solution. The account protection base offer includes 100,000 account protection transactions. The overage required is the total of 20 million minus this figure, giving 19,900,000 transactions. So to calculate the number of overage SKUs, we take this figure, divide it by the number of transactions included in each overage SKU, 20,000 in this case, which gives a requirement of 995 SKUs, which, as that's greater than 100, they will be entitled to Tier 2 pricing for these SKUs. Let's now work on the purchase protection SKUs required. And we know that if the customer has the account protection base offer, then it includes some purchase protection transactions. And if we look at the first table, we can see that the included figure is 2,000 transactions. The overage required is the total of 5 million minus the 2,000, giving 4,998,000 transactions. So looking at the purchase protection overage SKU on the right-hand table, we see that 2,000 transactions are included. So our calculation is to take the total overage transactions figure, divide it by 2,000, giving a requirement for 2,499 overage SKUs, which is greater than the 250, the minimum for the Tier 2 pricing. So the total cost for this imaginary customer is the account protection base offer plus the overage SKUs required for the account protection transactions and the overage SKUs for the purchase protection transactions. And a question which may occur to you is, does it make any difference if we take the purchase protection base offer rather than the account protection base offer? I won't go through all the maths with you, but what it boils down to is that you would have slightly different numbers of overage SKUs, but the end monthly price would be exactly the same. There is another option available for fraud protection, and that's the pay-as-you-go option, where you can pay based on your actual monthly consumption for each fraud protection service, and there doesn't need to be any long-term commitment. So to enable monthly billing, you need to purchase a monthly fraud protection pay-as-you-go license. This then needs to be associated with an Azure subscription for the fraud protection meters to be billed through. So you would choose the Azure subscription that you want the fraud protection transactions billed against, and you would enable pay-as-you-go billing in the fraud protection portal. There are 3 pricing tiers for each workload with, as you'd expect, prices decreasing as the number of transactions increases. And you can find details of the different pricing tiers and setup instructions at the link shown on the slide. That concludes this short video. Thank you very much for watching. If you require any more information around Dynamics 365, please do contact TD SYNNEX.